Today, we're going to look into the Waves ecosystem and explain the reasons behind its latest spike, as well as possible solutions to the issues and doubts surrounding its stablecoin, USD-N. For now, we'll have to wait and see whether these solutions are actually effective. Waves is a blockchain ecosystem that offers a platform to develop scalable and decentralized applications. Amongst its services lies Waves Wallet, WavesDex, and Waves Labs. The Waves token is used across its entire ecosystem to guarantee the network security. In addition, USDN is the algorithmic stablecoin developed in the ecosystem and leans on the Waves token to maintain dollar parity. This stablecoin was created on the Neutrino protocol, one of the most used on the Waves chain, which is also where other stablecoins have been created, such as EURN, which is linked to the euro. But the Waves blockchain also includes other protocols, such as SwapFi exchange or the lending platform called Vias Finance. To ensure security on the chain, Waves uses a protocol called Waves-NG, which is a proof-of-stake variant. Specifically, it is a leased proof of stake, which enables users to lend their tokens to a node to be staked and therefore obtain benefits. For now, we're still waiting for the completion of its roadmap to reach Waves 2.0. This update will introduce support for the Ethereum virtual machine and change the consensus protocol to practical proof of stake sharding. And given the confusion over the last few days surrounding algorithmic stablecoins, Luna's Fall and Tether being backed by USDT, we'll be explaining some of the differences between Luna, USD and Waves stablecoin USDN. But first, let's analyze Waves price movements. In the weekly timeframe, we can see its full history since 2016, where we can see the main uptrend with high lows and highs. If we zoom in, we can see this intermediate trend line and a change in structure as we lost the lows from June 2021. Lows that were reached in January 2022 and later marked a new high in April. This was followed by a low, turning this intermediate trend line into a downtrend. This trend line kicked off in April when Waves stablecoin lost dollar parity, but we'll look into this shortly, so be sure to stay till the end. Since its all-time high at $63, the fall was quite abrupt. The candlestick of the week starting April 4th is a bearish engulfing one, which broke the important support zone at roughly $24. And take a closer look at Waves' fall between March 28th and May 29th, which is of 93%. From March 28th, the price has been falling drastically, forming 8 consecutive bearish candlesticks with a growing volume average. And when the $4 zone was reached, a significant rebound took place. If we take a look, when the $8.2 zone was surpassed, which is an incredibly important support zone, the price structure experienced a change. The week starting May 23rd, it touched that bottom at $4, where we can observe something important, a considerable volume input, and up until now, a bullish engulfing candlestick with great force. The resistance zone at $8.4 could be a pivot zone, given when it reached the 200-period moving average, it marked a clear downtrend. And if it were to see a structural reversal, the 200-period moving average would have to be surpassed. In the daily time frame, we can see a clear bearish structure in this minor trend with lower highs and lows, and we can also see an oversold zone between May 12th and 29th, a pattern that we could call a falling wedge pattern. The candlestick on May 30th, significant volume input. This candlestick coincides with the Waves launch that will be discussed shortly. And let's take a look at the minor trend structure drawn in the daily time frame. It is a descending parallel channel, and on May 30th, we can see that the engulfing candlestick mentioned previously surpassed the previous 17 candlesticks, displaying an evident bullish movement. The key is that it closed above the parallel channel and then continued its bullish movement until the next day, with the candlestick closing above the important resistance zone between $7.6 and $9. To see a movement continuation towards the upside, we would have to see the price sitting above the $8 zone. With the deployed moving averages, we can see that the minor trend line coincides with the 20-period moving average, which is why the candlestick on May 30th didn't only surpass the higher part of the channel, but also the 20-period moving average, and is currently battling the most important resistance zone at this moment at roughly $8 or $9. If that zone consolidates and a volume input takes place, the next zone to be tested would be the zone between $11 and $13, which coincides with the 50-period moving average. And if we take a look, the RSI is found in an intermediate zone at around 50 points, which is why the price still has a way to go. If, on the other hand, the price is unable to consolidate, we would see a pullback to the higher part of the parallel channel that converges with the 20-period moving average and an intermediate support at $6. On the CoinMarketCap platform, we can see how over the last 7 days, Waves was positioned in the top 1 cryptocurrencies category according to the growth percentage, with an increase of 50%. Following this technical analysis, now let's move on to analyse what news developments or what fundamentals have had an impact on the price of Waves and its entire ecosystem. As mentioned at the beginning, we're still awaiting the Waves 2.0 update, although while this new system is being developed, updates will be made on the current protocol to streamline the network and make it more secure. But let's look at the difference between USD, Terra stablecoin and USD-N, Waves stablecoin. As mentioned in this video, the Terra ecosystem would burn X amount of Luna when creating new USD, which isn't the case with the Waves system. Waves, however, blocks X amount of Waves tokens when new USDNs are issued. The problem with Luna was that when the price of Luna dropped, thousands of new USD could be issued. With such a significant supply of tokens, the price dropped and lost dollar parity. On the other hand, Neutrino has a recapitalization mechanism with the governance token NSBT. NSBT holders receive the fees paid for Waves or USDN swaps, and there is an incentive to buy NSBTs and recapitalize USDN. Also, NSBT is needed for issues and redemptions, which limits the trading volume. Terra, however, did not have a similar mechanism. Now, let's move on to the Waves stability system. In the event of a deficit, Waves proposes a system to prevent the system from going bankrupt. When the Waves token falls, as in not able to cover the capitalization of the stablecoin, the smart contract detects this deficit and an auction is activated. In this auction, NSBT is generated and can be liquidated for a certain amount of Waves with a discount until the reserve's capitalization increases. If, for example, USDN has a capitalization of $100,000 and the price of the reserve token drops by 10%, the Neutrino protocol would then only have 90% of the reserve to cover the USDN. To liquidate the difference, the smart contract issues NSBT according to the number of orders in the order book. Let's imagine that just one person has carried out an order with a 15% discount. This means that the amount of Wave tokens paid is equivalent to $10,000 needed by the system, but will receive 11,765 NSBT with this discount, which is that bonus received for contributing capital to the reserves. This way, users are incentivized to contribute liquidity to the system. But watch out, because so far it seems that this system has not managed to maintain dollar parity effectively. And now let's look at new stories that have generated optimism in the market over the last few days. As mentioned at the start of this video, Waves' revival plan has been published. But what's this all about? The first solution executed by Waves in the face of the loss of parity is switching up the process and reducing the amount of NSBT needed to exchange Waves for USDN. This has worked quite well with users buying into the Curve finance pool, and parity has been restored twice over the last 2 months, although it is true that the recurring loss of that parity does not generate a lot of confidence amongst investors. Secondly, it attempted to solve the liquidity crisis, which can be summarized in 3 major actions. set daily withdrawal limits for USDT and USDC, curbing bot activity, establish dynamic limits to avoid liquidity outflows through over-indebtedness, and 3. Introduce 3, 6, and 12-month liquidity locks and shifting the distribution of wires rewards in favor of users who support the long-term sustainability of the protocol. In 2 days, 20 million have been blocked, which displays certain confidence in the protocol. But additionally, some decisions have been taken regarding Curve and Wise Finance. 1. Allowing buying and locking CRV tokens with 45% of Neutrino Wave staking profits, and vote to incentivize USD-N 3 pool to enhance USDN demand. Neutrino needs to adapt to external conditions. Curve Finance did not exist when Neutrino was created, but it now holds a lot of power over the USDN market price. In fact, the initial depeg was caused by a large selling volume in the Curve pool. 2. On the other hand, large accounts will be liquidated to take control of guarantees. There will be a proposal from Wise Finance for Sasha Ivanov, the founder of Waves, to take control of the $400 million debt from the biggest buyers lenders. 3. It also seems to sell guarantees without disassociating USDN in order to return liquidity to Wise Finance and reduce the usage fees, which enables greater user withdrawals. The problem is that Neutrino must still maintain parity in order to sell USDN without huge amounts of waste slippage. Therefore, the liquidation and sale of USDN collateral should be done in a controlled and methodical manner so as to not put too much pressure on the USDN price. 4. In addition, it seeks to improve the Neutrino architecture with a new recapitulation token that recapitalizes Neutrino with new Waves tokens when there is not enough collateral. Another issue is the USDN support rate, which is currently below 100%. The dollar value of the Waves tokens in the Neutrino smart contract is currently lower than the amount of USDN in circulation. The NSBT token was supposed to be the way Neutrino is recapitalized, but it doesn't work in this case. This is due to the number of tokens in circulation. There are only about 2.8 million NSBTs and 95% are blocked for long periods, which means they cannot be used to recapitalize. Therefore, there is a need for a new token. Eventually, NSBT will depreciate and be replaced by the recap token, but first they will coexist. Now let's look at blockchain data to get a better understanding of Waves tokens' latest movements. As we can see in this ranking, the Waves chain has experienced an increase of 7% in its total value locked over the last few days, reaching approximately $1.6 billion. Here we can see that slight increase and how Wise Finance has a 75% dominance of the Waves blockchain TVL. And on Wise Finance specifically, we can see how it reaches $1.2 billion. In the Waves Explorer itself, we can see how the number of transactions increased considerably on May 31st, reaching 86,000, which reveals an increase in the use of the blockchain. All in all, the latest decisions around Waves improvements seem to have generated some investor confidence, although we will have to wait and see how the massive Waves 2.0 update rolls out. We will find out whether this increases trust or whether its ecosystem disappears. We will also have to pay close attention as to whether it improves security and therefore the use of its ecosystem. At the end of the day, it is a bet with a 50-50 chance of great benefits or a drastic fall. What about you? What do you think about Waves? Let us know in the comment section below.